perfect example of that is if in a personal way was over the last month. My conviction was that this could have been an area where oil would strengthen, and
Hmm.
that and I actually was putting money to work and going from an underweight positioning in energy to being equal weight and starting to put money to work. But what is clear is that I may be early to this thesis. I know
Yeah.
I still am actually in the bigger picture bullish oil. I think there's a asymmetric opportunity, but what the charts and technicals and the way that macro is developing, it's clear that that thesis may not be happening in this window. And I
Hmm.
have to acknowledge that you're sort of testing out whether or not this is where that trade is happening, and if it's not, you have to reevaluate and then look for where is the opportunity to get into oil. And that might be 4 months from now from
Yeah.
some other catalyst. You have to feel it out back and forth in the
You know,
market.
the best thing about doing money talks is getting a chance to talk to some really deep thinkers, market players, market analysts, and they can share the expertise with both me and with you listening. So that's why I'm so happy to welcome back to the show Patrick Ceresna. I knew him from bigpicturetrading.com, and that's where you should know him from. Now, you may have seen him on YouTube recently too. He's got
Yeah.
a new YouTube channel out there, but it's Picture Trading, easy for me to say, bigpicturetrading.com. Patrick, thanks for finding time.
Mike, thank you for having me back on the show. It's always great having a conversation with you.
Well, and I want to explain a little bit and, certainly correct me or add to it, but, I followed your work for a number of years. You are an excellent technical analyst. You're looking at charts and trends and momentum and all of these things that
Right.
come together that create timing, identification of areas to look at, et cetera. So forgive me for starting just a simple question, which is, what's your take on the markets these days? I know you were thinking in the last week, these are important points right now, So
Yes.
maybe give me your overall take first.
Absolutely. So, thank you for having me back on the show, and the timing of having me back on the show is amazing. First of all, we're going into, just from a traditional seasonality perspective, a period where money flow into the markets tends to curtail off. This September October period has always been a very challenging period in the markets, and we're there after having an extraordinary run. We basically, over the course of 4 months, have seen the market rip 30+% on the upside. And the one thing that I adhere to in my process of understanding the markets is I like to describe the markets like a set of lungs, and they
Mhm.
breathe in and they breathe out. And there's no such thing as just breathing in and there never being an
Yeah.
exhale. The markets are always going through these cycles. And we, after a run like we've had, the market pausing and exhaling is the natural course. Now, the quite bigger question and the debate is: does it turn into something more ominous? Is there a bigger
Yeah.
crash, or is this just going to be that typical 3-4 month period where the stock market trades sideways or down 5-10% before another bull market continuation? The one thing that I'm right now of high conviction in is that the bull run that we had over the last 4 months is in the later innings of the game, if not already seeing the topping. The one thing that happens from a technical analysis process is there isn't two phases in a market. Most people look binary. It's either bullish or bearish. It's either
Yes.
going up or it's down. But actually, in the markets, there are periods of bullishness, but then there's a period of distribution, and there's periods of bearishness, and there's periods of accumulation. There's these periods where the stock market, it doesn't necessarily have to be bearish just because the bull run has run its course. It's where there's an equilibrium of buyers and sellers, ample supply of stock available, and the stock market just stops its advance. I feel that the jobs numbers that we just witnessed on Friday was actually quite pivotal, because the revisions from the previous month have really indicated that the Fed has really, I still think it's policy error, but essentially what they've done is they are reactive, which is they first wait for things to start breaking before they pump in the adrenaline of a rate cut cycle. And what's clear is that they've been kept saying that inflation is our concern and inflation is our problem, and the jobs were fine. Like literally on Wednesday, we
Mhm.
last week we heard them literally say that, and then suddenly here we are with these revisions of jobs, and clearly the jobs are far worse than expected. The odds of a September rate hike went from 40% to 90% literally in 3 days. And it's clear that the market is signaling that there's some sort of economic weakness, and the Fed's going to have to act. And so when we have markets at these extreme valuations, this is a point where the stock market has got a very good catalyst for being this overhang.
I come back just to something you said. So you're looking at the likelihood of a rate decline. I think we
Yes.
said up, but a rate decline has really exploded. Looking at it, because of course the rumors were going on for ages that the job numbers weren't accurate. Going back a full year,
Yes.
they were suspect. So when you get the validation of that, I think it has a tendency to have a pretty quick change in psychology.
Oh, absolutely. When ultimately everyone needs to keep justifying
Mhm.
historically high valuations of markets by the fact that there was going to be a soft landing and everything was going to be fine, and ultimately Trump's stimulus packages and everything were going to just keep everything juiced up and the bull market going. Now, I don't necessarily want to come in here talking outright bearishness. What my whole thesis right now is simply that this is not the time to put new money to work. If you haven't been buying the market 3 months ago, 2 months ago, when there was still opportunity, you don't come in, using a baseball analogy, you want to be buying when it's in the first to fourth innings of the game where there's still game to be played. You going and throwing money in at it on the eighth or ninth inning of the game, you might as well be conservatively positioned and wait for pullbacks to put that money to work. And so really my whole thing here is that this is not a time for new money to be going in. Another race car analogy I love is that when you're in a bull phase, it's like being in the straightaway in a race car.
Yeah.
You go down to 300 kilometers an hour, you're going full throttle, but inevitably the straightaway ends and you're going to go to a turn, and you have to gear down, slow down in order to not crash in that turn. And so using that analogy, this is a gear down moment. This is a moment where you don't keep the pedal down to the metal going into the turn. You have to slow down and avoid a crash and make the turn safely. And that's where we're at on that broader market positioning.
That's really well put, by the way, very well put. And I hope people listen. I mean, what that tells me as someone who's in the market, you say, review your darn portfolio. Where are you
Yes.
taking maybe more risk? You don't have to make every dime that's out there. And this is what kills me, by the way, Patrick. I mean,
Yeah.
really, I've been at this a long time. And you have people who you say, what are you? Well, I'm a solid long-term investor. Then why do you keep acting like a trader worried that the last 9 cents is going to be on the table if you exit? I just think
Yeah.
there's a huge, your warning. I just want to make sure everybody heard that loud and clear. It's
Right.
always prudent, of course, to manage your risk. Have a look at your portfolio. As you say, and especially as you say, if you've been on the sidelines, my God, where have you been? You hardly wait, as you said, to those wonderful
Yeah.
analogies. You hardly wait till the eighth and ninth inning to bet.
Right.
And so I really hope people take that to heart, because I think it is a precarious environment out there. Doesn't mean we shouldn't do this or that, but it is a precarious environment. Are we waiting
Yeah.
for the next tweet, or posting on True Social? And we have seen how abrupt those things can be. We've got also geopolitical problems
Yeah.
out there. I mean, serious problems. So as I say, I'm liking that people can hear your excellent advice there, and they can get more. They go to bigpicturetrading.com. That's
Yeah.
exactly the kind of thing you do. You help your clients with is, adding your expertise to their decision making,
Absolutely.
within that. The other thing I love, by the way, about technical analysis is that, it already has taken into account much of this stuff, the fundamentals. I'm not saying to ignore them, but For me, I would much rather make decisions based on what my chart's telling me, because they're screaming sometimes, than
Yes.
waiting for the news that's a little late, like the jobs number.
Absolutely. I mean, in the end, the beautiful part about technical analysis is the charts don't lie about flows. You can have
Yeah.
somebody telling you a bearish thesis, but if the market is breaking to 52-week highs and there's clear buy flows coming into this market, then the chart isn't lying. This is clearly not when the bear turn is happening.
Mhm.
What you're looking for is indications when your thesis is being proven by the way that the price is behaving. It's proving that the way investors are voting or with their money, with the way that money is being deployed and the areas it's being deployed to is being confirmed. And this is what you're looking for in the charts.
Again, such excellent advice. I know in the past, I have a narrative in my mind, or whatever story I'm loaded up on. And then I
Yeah.
look at the market. Is the market agreeing with my scenario? Because my job is to make money, not to have
Yes.
whatever my opinion is prove out. And so
It's
I
wisdom.
just think, again, how you've put that is excellent. I laugh at myself at how many times I've had to pull back. I go,
Yeah.
yeah, you've really convinced yourself of this one, baby, but the market is clearly not agreeing with you. Wait till it does.
A
Uh,
perfect example of that is if in a personal way was over the last month. My conviction was that this could have been an area where oil would strengthen, and
mhm.
and I actually was putting money to work and going from an underweight positioning in energy to being equal weight and starting to put money to work. But what is clear is that I may be early to this thesis. I know
Yeah.
I still am actually in the bigger picture bullish oil. I think there's a asymmetric opportunity, but what the charts and technicals and the way that macro is developing, it's clear that that thesis may not be happening in this window. And I
Mhm.
have to acknowledge that you're sort of testing out whether or not this is where that trade is happening, and if it's not, you have to reevaluate and then look for where is the opportunity to get into oil. That might be 4 months from now from
Yeah.
some other catalyst. You have to feel it out back and forth in the market.
But again, this is what I love about the markets. But you have
Yeah.
to have a maturity. And
Yes.
my old borrowed expression is, if you don't, I think it was Bernard Baruch who says, if you're in a poker game and in the first half hour you don't know who the patsy is, you're the patsy. And I also think, as I say, it's just fascinating that I work so hard to get people to understand your opinion doesn't matter. The market opinion matters. The overall, what we're doing is assessing not my opinion. I know what my opinion is on everything.
Yes.
It might be evolving, but I know what my opinion is. But my goal is to align that with the market. That's how I make money. Is the market supporting me or not? And then, as I say, the maturity comes and goes, I don't think that's right. And this is the antithesis of politics, by the way.
Yeah.
They're like a dog with a big bone. They're holding on tight to bad policy.
I always have a famous saying that I say I like to technically trade fundamentally good things, and so my goal is to fundamentally say have a thesis like I'm bullish this or this and this and this, and I have that stuff. But the question then becomes, but when is the market
Yes.
actually bulling my thesis, right?
Yeah.
Like for instance, I have a thesis that every time a new political election occurs, pharmaceuticals have incredibly big sell-offs because they've been politicized. Everyone
Yes.
taxed them, everyone makes promises, but then yet all the lobbyists and all these people come in and they basically win over some politicians. And every time, whatever the result is, it's always ends up being far more subtle impact on and there's huge pharmaceutical rallies. So I have a thesis that after a year now of Trump being in office and these pharmaceuticals having wiped out 50+% of their value, at some juncture, they're likely to bottom and there being an opportunity. But right now, they're still behaving awful.
Yeah.
They still technically every rally is still meeting distribution. You're still not seeing them turning. So I have a thesis, an idea, but I'm waiting for when will the market actually show that the pharmaceuticals have actually turned the corner and actually
Hmm.
are starting to rally. And so I'm combining that technical analysis with my thesis, and I'm waiting for the charts to tell me that this is the moment to act.
No, I think, again, wonderful advice. Let me take some of that and turn into one other, you're so well known, and bigpicturetrading.com, so well known. And they can go, you mentioned, I want to encourage people to go to YouTube. I'll ask you more about that in a moment.
Yeah.
Um, is to use the option market at different times for different scenarios. So I'm
Yes.
a conservative. So I'm looking at a period where you say, maybe we've squeezed out the capital gains that's out there, or the propensity is that we have. I'm not willing to take the
Yeah.
risk at this high end. But people have got to start using call options and put options. You do it very sophisticatedly, but it doesn't have to do, I mean, it can be very straightforward. Like, I'm going to sell a call and boost my income. Simple as that.
Yes.
So maybe, I know it's Barbara Walters' question here,
Yeah.
but, maybe give us an example of how you would do that. That, you've got a 4% dividend yield, you can boost it to like a annualized 6 or 8%.
Absolutely. Enhancing your income through options writing is the number one way, especially for those that rely on their cash flows to live off of.
Yes.
So, when you're turning around and you have these great stocks, many good dividend payers, you can, if you can get an extra 2, 3, 4% a year by selling far out of the money covered calls, what you're doing is you're playing a game where, rather than relying on the long-term appreciation of the securities as the way to make your edge, you're actually compounding cash flow off of those. And so
Yeah.
it creates less volatility and more certain outcomes in a portfolio. But the one thing I love generally about use of options is that it's a mechanism that can also be used to control risk. And like for instance, it's the only real broadly accepted way of managing risk is diversification.
Hmm.
Everyone tells you that you just need to own a broad diversified basket, but there's a trade-off to this, because when you're diversified, you also have diluted any chance of making any real money, because you have all these uncorrelated assets moving higher and lower. And you do it because you think it's going to protect you from a market crash. But the bizarre thing of liquidity events is that the correlation of all these assets goes to 1 during a market event, and they all go down together anyway. And it creates this kind of thing of like, why am I putting all of this effort into owning a million different things? The beautiful thing about options is, like, for instance, if I had a high conviction, for instance, that I thought uranium was going to go higher, or energy was
Hmm.
going to go higher, or whatever your thesis, gold was going to go higher. Um, if you put on a concentrated position, which is frowned upon in the financial industry, but let's say you said, I'm going to put 25% of my capital all into this one thesis, this one idea.
Hmm.
Well, the reason why it's frowned upon is, well, if that idea loses 50% of its value, it actually causes real, genuine damage to your investment portfolio and
Yeah.
sets you back. But often with options, you can remove that left tail risk for a very reasonable cost. So I could go in to my favorite thesis and basically construct a trade where the worst case scenario is that I get drawn down 10% on that one trade. And now I have a concentrated, high conviction idea, and I know that if the whole thing blows up, that I'm only going to be down 10%, which is a 2.5% drawdown on a
Hmm.
25% position, which is something that I could recover from. Now, this allows you to put yourself in a position that your favorite high conviction ideas can make a meaningful impact on your financial results and the lifestyle that you live off of those financial results. And so, using those options for protection, for income, it's just so valuable to be able to do that. And not enough advisors take advantage
I
of this.
agree.
And really, in the end, those investors that especially if you are coming at the tail end of your career and you're now going to potentially live off of your money, and you want to learn to invest for yourself, how could you not use these tools in order to get better results from your for your investing?
I think it's a great explanation. I'll give you one that I've used so many times. I'm not a big believer in all or none. You know what I mean? Like I'll have
Yeah.
an opinion, and I know I don't have perfect information. And again, let's say I've got $20,000, so maybe I'll commit 10,000. You know, because by the way, because I've missed too many opportunities waiting for certainty of
Yes.
whatever methodology, so I never got in. And so I sort of learned the hard way, the expensive way to go, well, why don't you take a third or half your position now? So let's say I've done that,
Yeah.
but I like it. I like it. Well, something so simple as selling a put option, which gives somebody else the right to sell me that stock, and we agree upon a price and time frame. So I'll sell the put right there, and I'll
Yes.
go, if I get it, if they do sell it to me, I probably got a $5 discount. I'm just picking numbers right now, but a
Yes.
$5 discount. If I don't get it, well, no, I
I
didn't
made
get the
anything.
rest of the upside, but I kept the $5.
Yes.
And so I'm just trying to encourage people to look at the strategies, a la what you've said.
Absolutely. It's such a valuable way of approaching it. It gives you so many more plays to make
Hmm.
beyond simple binary decision of buying or selling.
Yeah.
It allows you to say, well, look, I've owned the stock. It's made me a whole pile of money. I don't want to sell it because I'm going to have to pay a stupid amount of taxes on this
Good
thing.
point. Yeah.
But yet I'm scared that I'm on a pullback. I'm going to give back the money that I've made. Now there are option strategies how to protect those gains and not give them back. These are things that give you a choice that isn't that my only choice is to sell it.
Yeah.
You can keep it and just find a way to hedge it out. Because, I mean, if you made 40% on a stock and you turn around and say, well, I'm going to give 5% of my gains away to have the certainty that I'm guaranteed to make the other 35%. And I still have the upside of the stock if it keeps going. So for some people, that makes sense.
Absolutely. Time is always too short here, but I want to make sure people know. No, you can go to bigpicturetrading.com, and you help people through these various decisions and the education and everything. Tell us how we'd watch you on YouTube, because I know you've been doing a lot more stuff on YouTube. So how do I find that?
Absolutely. It's just my name, Patrick_Ceresna. You can on YouTube just type Patrick Ceresna and find the channel. But I'm pumping out usually 4 to 5
Yeah.
videos a week, and they're all free.
Yeah.
And my goal on YouTube is very simple: is to just give maximum amount of value and information to as many people. Very similar to what you do. You've been an influence on my life in the
Well,
early
thank
years of
you.
my career, and just you got out there on radio in the same way I'm getting out on YouTube. It's just an
Yeah.
opportunity to give valuable information to people and give them ideas on how to think about things. And it's an important thing for them to sort of understand the principles of all of these things without needing to go and buy something
Yes. Right.
to do it. It's an opportunity for you to gain information, and then if you feel it's right for you, that's when you make a decision to subscribe to something or to take the
Yes.
next step.
Well, again, so that's Patrick underscore
Underscore Ceresna.
Ceresna.
Thank you. Yes,
I'm not a
Ceresna.
good
Correct.
speller, by the way.
No, you did it. You did great there. You did great there.
Patrick, wonderful to get a chance to chat again. Thanks so much for finding time.
Thank you, Mike, for having me.